How do we know how to play breakaway patterns and these gaps that keep happening on earnings? So this is Target. And you remember Target had this big drop down on earnings. I think it was about a 20% drop or something. Now, people get excited about this. I do say that gaps often fill. Gaps always fill. Gaps probably fill 90% of the time. They're not going to fill immediately, but they're going to fill over some long period of time. You have two gaps here that you need to fill, one here and one, of course, over here with Target. But let's figure out, instead of just thinking about the gap, let's think about what a breakaway pattern is, because these types of patterns can absolutely burn you. So what happens is the people that have their money up here, the buyers, they own the stock, all of a sudden, boom, this thing drops 20, 30%, whatever it was. And they're saying, maybe not in a stock like Target, maybe a stock like CCL, something that people are a little bit more hesitant about. But what's going to happen is patterns the same. So let's go with it. The stock price is going to start creeping up. And let's use green candles. It's going to start creeping up over a long period of time. I'm making this happen very fast. All of a sudden, these people that lost all of this money, they're saying, if I could just get half my money back, I'm good. I'm out of here. And what will happen again? There will be, maybe on another earnings report, there will be so many sellers that come into the stock and the stock price will gap down again below where it previously gapped. So you thought that you were going to start recovering money, and then boom, another massive gap happened on you that gapped down lower than it was previously happened. And that is a breakaway pattern, and that is something can burn you. Now, conversely, let's figure out how to play these gaps, because you can certainly make money on these. So the next earnings report that comes out for a company like Target, I would pay attention. Of course, I would reduce my shares because I wouldn't want to get caught in that type of breakaway pattern. But let's say that we start getting this come down here and we start getting this uptrend through the sweet spot and this thing starts moving up. As long as the trend is on your side, moving this thing to the top, it's very rare on a big company like Target that there's going to be some kind of big breakaway pattern that's going to occur. So how can you do this? Follow your trend. Don't trade on earnings. That is how you're going to fill that gap, and that is how you're going to avoid the breakaway patterns. Catch you on the flippity flop.